Let's take a look at some of the major semiconductors in the market and what's happened recently. Want to start with AMD and kind of walk you down memory lane a little bit. Uh, Not having to even go back too far. So March 4th, 2024, we'll be opening up the market again March 3rd, Monday, 2025. So a year ago. Over the last year, this stock has almost reached its 52-week low, pretty much right there on the dot. It probably could have been a couple of dollars that touched it. But can you imagine an investor who, maybe came in at with $1,000 investment, a regular type, not the big dogs who do, 10,000 or better. Usually that's where they are, 10,000, 15,000 into the hundreds of thousands or millions. But it's just so shocking for a trader an investor who would have come in last year, and let's say they just kind of like went with the flow and they were just holding AMD, and they would now be down almost 80%. That's just absolutely amazing. But other things, it's kind of hard to like really say, well, either one of these catch inside of here. Let me back up a little bit. These are pretty much dead to rights. There's just not enough support in the other areas, the minor areas that you see here. And we're going to do some quick breakdowns real quick. So in these areas here, these are not strong enough. I know they look like they might be, but this would be considered minor support. It's there, but this is minor support, and we'd have to do a whole another scope on just where the actual support is. This kind of stands out, but no. The more major levels would be down here that start at the run. Here, I'll do it like this. This would be the major, and so would this. These would be the major areas which the market support and resistance are. Meaning that when price action was coming up this way, he had to violate this part here to get this high up here. So he had to violate these areas at 158 to even have a chance when he was in those early twos, 207 to 227. And of course, price action started rolling over after that. But again, talking about the support, I don't feel like these are going to hold. I feel like it'll be slightly under those. So inside here, the greener looking one inside, that one right there, that butterfly, that's going to be the first opportunity. Well, it's not going to be the first. I'll talk about where the next opportunity is going to come in at. But one of the major opportunities should come way down here at $74. That's amazing for a company like AMD. But maybe AMD was overpriced. All right, maybe they were overpriced, but they got a lot going on, and the semiconductor whole entire industry is taking a hit, as well as a lot of the things in AI, which AMD wants to participate in that space. They're going to have a large footprint in the AI space. But anyway, the first opportunity for something that could sustain for like a swing trader would be entering around $74. The next one would be the bat pattern, the bigger, longer one, the one that's in blue down there. So the next one, shockingly enough, if either of these things take place, and we'll talk a little bit more about some of this stuff, it would be $55. Now, I will say that kind of crunches them up, and that brings them down to a very competitive price, and that would drive a lot of investors back in. But that would just be such a shocking free fall from $230, is it $227 down to $56. Now it can happen, and that doesn't have anything to do with the company or its performance, because they're still producing chips all over the place, and they have now entered the quantum computing space. So I think that a lot of what they might be experiencing might just be a part of that whole overall investor sentiment. So now that we've taken care of that, I did want to come back and take one step back before we talk about the whole entire story, because there's a lot we're going to do here. Is to just come in real quick. I just want to come in a little bit closer, and I want to show you guys something. There's actually a couple of things I want to show you, but I want to show you something. So looking at this trend here, okay, I'm going to remove the advanced patterns. the harmonic patterns. I'm going to take those off. And I'm going to come in a little bit closer to the 4 hour. But I want you to be able to see. That's the problem. So we're going to move over to talk about what's coming up next. We're gonna use trend continuation. We're gonna probably, for one of the rare times, go away from advanced pattern recognition, and that's going to start here. Okay, so yes, the whole entire thing is a trend. Make no mistake about it. Make no mistake about it. Okay, this whole entire move here is one big trend. Okay, but we're just going to focus on this part here because this is going to lead. This is actually what's leading us. This C leg of that bat pattern is what's actually going to get us down to where I said the entry is. So let me come back and show you guys something pretty cool. Now, this allows us to go back to the basics for a second. So we're going to segue out of advanced pattern recognition and harmonic patterns and just do some classic basic trend continuation. I want to show you guys something to allow me to do a little bit of teaching here. But this right here will be your starting point. Don't know why that always happens. That'd be the starting point, right? And this would be your initial low, and this would be your outside return. So your initial low, or IL, and this is your outside return or your retracement. Starting point, initial low, and this is going to be a lower high, or LH. Okay, got a lower high, and then that's just going to repeat. Okay, in a series of, the other part is in a series of basically A to B is equal to CD patterns. All right, so coming down here, and this is a new structure low. New structure low. Outside return. New structure low. And then from here, you have another lower high. And you have another new structure low right here. And the new structure low is created every time there's a break and close beyond the previous structure. Okay, break and close. Okay, so here's the close, break and close beyond the previous structure. Okay, so that's what's giving you these new structure lows. Okay, so you got a starting point, you got your initial low, you got a lower high because it's lower than this one. You got a lower high because what's going to happen is this is continuing to print lower high. So what we're doing here is just giving a basic lesson on trend and identifying trend and talking about how a market moves. Okay, so outside of it continuing to make these equal measure move, A to B is equal to CD, it's also why it's doing that. It's doing a series of other things. And if you want more about this, I have a video on it about how the market moves in the Harmonic Trading Academy playlist. But you got your lower high, new structure low, lower high, new structure low, lower high. He does get it here, but I'm not going to count this new structure low, break and close beyond this previous structure, but we'll count it, we'll call it at this one right here. New structure low and a lower high. New structure low. Uh-oh. I didn't like something. There we go. Outside return, new structure low, but we'll take this one here, new structure low, outside return, and then coming down. So let's finish up the text. New structure low and a lower high. All right. So look at that beautiful trend. Okay. So when the market is trending, okay, so the point I'm trying to get to is as the market is trending bearish in this case, well, it's trending bearish in this case, it's going to continue to print lower highs. Okay. So you can add the terminology to your box. It's going to continue to print lower highs and new structure low every time it breaks and closes. Retest the previous structure, break and close, new structure low, retest previous structure, break and close, retest previous structure. See, and if we were to come across these to let you see it, it's all it's really doing is creating these new levels, retesting the new level of structure every time, if that makes sense. Okay, so all of that is what is leading us up to an opportunity, which would be a dangerous opportunity, in my opinion. Knowing that you're in this trend, you say, okay, well, there's got to be. What if somebody wants to trade one of these pullbacks? You'd have to know where the pullback is pretty much going to end. So it would start up here and then here. So you can't. So this is a case where you can't worry about it being oversold on RSI. All right. The first thing that the trader would do in a case like this, if he wanted to trade the trend, is just go ahead and clone that leg. Go ahead and clone that leg and go ahead and make your A to B is equal to CD pattern. Okay. So this trend will be done right here. Okay. The other thing is understanding how much this retracement was. I can tell you right now, it's a 382 retracement. So grabbing the Fibonacci retracement tool and measuring from that swing high to this swing low here. And I said I can tell you it's a 382. So it's a 382 retracement. Now also knowing that a 382 retracement equals a 1618 extension, to bring in your complete kill and entry zone, grab the extension tool and measure swing high to swing low with your extension tool. And then you would go get your 1618. Because you know that you had a 382 retracement is going to equal a 1618 extension. It was 382 to the dot too. So you're going to be down here in this zone. So you see, when we clone A to B and put it on C, it's putting us right here in this zone. So this is the entry zone right here. So it's either going to be at the completion of the A to B is equal to CD pattern or the 1618. So the trader would be looking to trade. This is how you would build this out. The trader would be looking to get long here. I shouldn't have to put the disclaimer in here, but this is not a trade signal. This video is being produced for educational and entertainment purposes only, and to teach trend continuation and show you how this setup would look. As always, consult a professional of your choice when dealing with your financial matters or before putting your capital at risk in these very volatile and dangerous financial markets. That's where the opportunity would look, trading out of here. And again, remember, as I showed you, it's always going to go retest previous structure. So if you were to get, if you were to enter here, you would simply just trade that back up to the previous structure, which is right here. Okay. And then that trade opportunity would say that you got long at that point right there. And there's a lot. This is going to be a long video, unfortunately. Oops, sorry. I went too far. Because this, when you really, the way that this is trending, you don't want to be too aggressive on it. This is one that you really just want to go ahead and take your 1-to-1 shots. But the problem is you would need your price action to come down into that space for you. In this case, it would be red. Well, let's say it's green. You let the red one close, it'd be green. And it would have a wick on it. Right, it'd have a wick on it. And then you would want the ATR of this wick. Okay, you would want this price right here, whatever the price is right here, is that's part one of it. and you would want the ATR of whatever this wick is, and you would subtract the ATR of that wick from this price, which in this example, if this is how it played out, which would be $86.40. So you would take 86.40 minus the ATR of this candle, and that's where your stop would go, which would probably be, somewhere right up under there, something like that. And it's still giving you a 2-to-1. So it still comes out to a beautiful setup. But what I wanted to do is, when I looked at this, it gave me the opportunity to go back and just teach some classic trading, normal stuff, no harmonic. Well, kind of harmonic, because we still ended up taking an A to B is equal to CD pattern to determine entry. Remember, it's always going to be about identify, predict, decide, execute. No matter what, you have to go through that. There's no way around it. Okay. That being said, since I'll come back out real quick. I'll try to leave that on there. You guys know that I like to keep a pretty clean chart. But so just remember what's going on. The overall sentiment is, you could probably take that trade, then get out the way, right? Because you, in all your wisdom, know that this run is not over, and you ultimately know that it's pretty much going to be that butterfly in there. But then while keeping an eye on this advanced that pattern right here, 886, where you at? 886, where you at? Come on, baby. Always hard to get. Okay, I'll do 87. But knowing that this is more likely, so that this trend is probably not going to end until this bad pattern is completed. And then also, let me see if we can go and put the go find. Now I got so much stuff in there, I don't know if I'm going to be able to find our little butterfly that was in there. I don't know if I'm going to be able to find it, because I don't want to have to keep scrunching up so much. Don't remember where he was at this point. Okay, so anyway, so since I erased the art, now I can't find it. I'll have to clean it up to go do that part over again. And I don't think that it was in here. I don't think it was here. Let me see. Is that a 786 right there? Okay, that's him. 786. Sorry, he was right in front of us. 786, and then 127. 127. Okay. Probably need to change his color. Make him something else. Make him yellow. All right, cool. So yellow butterfly down here at $58, or the bats at $74. Both of them possibilities, but unfortunately that took me into a whole breakdown of AMD when I really wanted to just talk about some of the fundamentals and things that are going on with it. But let's talk about the competitor, Intel. This is going to be real quick. We're not going to do too much of a breakdown on Intel, but I'll just talk about it real quick. So one of the Intel, there's some things that they didn't do right, and this usually leads to the demise of a company. When you see companies that were large and then they just disappear over time, you're like, oh my God, where'd that company go? It's very simple. Usually they wouldn't keep up with the times. They had pretty much 90% market share in their heyday. This is the early 2000s, let's say 2000 to 2005-ish, 6-ish. And AMD was nothing, and that's I'm still an IT professional to this day, but I was actually in a lot of tech and hardware at that time, and I've built thousands and thousands of both of these computers. I've built 10,000 AMD computers, and I've built 10,000 Intel computers, literally. And I just remember nobody wanted AMD. It was considered the trash. It was considered the cheap processor if you just really needed to get something done. Like all the cool kids and everybody had Intel, and like even there were even levels to Intel. Like you kind of sucked if you had a Celeron. You had to have a Pentium. So they were dominating, and I think they had about 90% of the market share. And then you see AMD coming up. And what happened is Intel didn't keep up with the times and the trends and the things that they were doing. Plus, the pricing was kind of high, and it doesn't seem like Intel had even. When I say that they didn't move to the trend, AMD and Nvidia started looking at these graphics chips and things of that sort, and Intel wasn't doing that. Now I don't know. I don't know like how the partnerships went in depth, like if what they did, but I was there at the time, and Nvidia, who is still here dominating that sector today, not too many companies offered resistance when they could have and should have. Okay. I'll tell you something that Intel did get right. They did start making chips for Apple computers. So then they had both of those. They had the Microsoft market making the chips for Microsoft operating systems. And then they really got strong when they started making chips for Apple. But here's where they messed up again. When we got to the cell phones and the mobile, they refused to participate and move that way. So if you get anything from this video, take that part. Now I'm going to finish that part off with this. Not only did they not take the space and the opportunity that they had to take some market share or have a footprint in the mobile phone sector, they sold it to Apple for $1 billion. The modem chip the processor that they had, they sold it, and they should have kept it. Okay. Now that leads us, that's a little story about Intel. Now that leads us over to Qualcomm. Okay. Now these people have a drastic story too. Something devastating happened to them, and I don't even know how they even survived it or if they will survive it. They lost 80% of market share. Qualcomm, okay, so they were producing chips for the iPhone and the Android. I'm sorry, not chips, the modem. Okay, they were producing the modem for the iPhone and the Android phones, and iPhone dropped them. And remember when I talked about Intel selling them their technology for the modem that they did produce in Intel? Apple dropped Qualcomm and is now producing their modems in-house with the technology that they purchased from Intel for $1 measly billion. Now, this company has lost so much market share. It's amazing. Now, there's still so many other things that you can do, right? It doesn't completely kill you, but it almost puts an end to the trajectory that they would have had from starting from $43 and then looking up and being at $250. It almost kills that. As you see, I think there's still some possibilities technically, or from a technical analysis perspective. I think a lot more would have to happen on the fundamental perspective. But if you notice, you just got this consolidated box going back a year at this point. Just nothing. Nothing, because a decision has to be made on this company's direction, or the stock is not going to move. It's going to stick in this little range. It's going to just range up and range down. What is and could be considered support that I have circled out here, something's got to give there. Something's got to give there. It's you either going to break below that and just crash completely out, or you're going to break above it. Something's got to happen. We just don't know what. So I did want to just come and talk about that little very interesting story. Now, there's one more piece to this story, okay? And that's TSM, okay? Now, this is, oh, wow, look at that. So this does take us back into the Intel story, because since they're doing so bad, these guys, TSM, are moving in for the takeover of Intel. There's some politics involved, and there's some back and forth, and Intel wants to remain the big dog because they're so prominent, etc. But TSM, Taiwan Semiconductor, they are coming in to take and save that place. Now, with that being said, as we go ahead and close this nice story out, it is, for whatever reason, harmonically and likes either crab or butterfly. So you got 3 of them here, and I'll remove the other 2 and just talk about where we are right now to close this thing up. So I'll remove the other 2 because that's irrelevant. All we would need to care about is where we are right now. Okay. So just break this down and we'll get out of here real quick. Okay. X to A leg. Okay. Needing a 786 retracement of X to A for a valid B leg, which happened. Okay. C leg is okay as long as there's a 382 retracement. This one is kind of deep at 70% for C. And then an A to B is equal to CD pattern. A to B is equal to C and D. You see, I have the clone here of A and B. Took A and B, cloned it, put it on C and D. And this thing came and filled to the T. Okay, and it does meet the requirement that D is below X. And not only that, there's been a double bottom formed that I have marked off 1 and 2, where the lowest low meets the lowest close but does not close beyond it, and it reacts. So then you had a low right there of 176 that's pushed up now to 180. $4 already gone off the table, with the potential move up somewhere into the 190. So a very, very good move on the table for TSM. I need to, so their news is just pretty much dealing with the takeover, not so much. I need to probably go do just a complete fundamental analysis of it. The technicals, of course, I've done. That was easy. Double bottom and advanced pattern. And then I think the last part to go with that would probably be just checking relative strength index. It'd be nice if there was some divergence. There's not. Let me just clean this up a little bit because that's wrong. This should be 80-20. And we're almost done. You guys can go look at this again and get what you can from it. But hopefully you learned some about some of the historical information regarding these 4 powerhouses: AMD, Intel, Qualcomm, and TSM. So 80-20 and 7 period. Let me just get that right first, just so I can make sure that I know what I'm looking at. And I don't want a background. I just want to clean. Okay, good. Wow. Okay, sorry. So I needed to clean up. And then once I tuned the RSI properly, yes, there is absolutely bullish divergence. Okay. So something indeed that I am going to have to consider next week. It's kind of pricey at $180. We'll have to figure something out how to approach it, and we'll see what we can do with it. But it looks promising. As long as I can get the fundamental part right, everything else works. So that was TSM. Pretty much all I got to say about that. Actually, let me go a little bit deeper. I need to go deeper than that. Let me go to the day chart and see what the day chart looks like. Day chart does have the bullish divergence as well. And in terms of structure, I don't really see too much that would excite me. Okay, well, here it is. I wish that this was a little bit better, but yeah, so there's some structure in that area that could allow this to work. So here, kind of iffy, but here work the structure, price going under, holding up here, price under, boom, holding up here, price taking off, using it. So might be relevant enough. And of course it worked here. We're back in that same zone. So yeah, it's basically the trading. So the day time frame opportunity could look better, like maybe a green closing candle or something like that will make me feel better. But the 4 hour, the trading time frame in this example does look pretty good. Good enough for me in this case, but I don't know. It's just a little bit like the fundamental part. Like if they can get that Intel acquisition together, I think that'll be pretty major. And Qualcomm, they got a battle on their hands. Let me just come in and just see what's here for Qualcomm, if there is anything. But it's pretty much going to react off that structure. What all happened here? There was what things were here. There was a nice head and shoulders opportunity. Had we been looking at it right here for a beautiful trade with the opportunity here. If you want to know more about the head and shoulders pattern, we do have a video on trading the head and shoulders pattern. That was a very nice opportunity, by the way. And I was wondering if there is this was the head and shoulders opportunity. There's no cipher, there's no bat, there's no Gartley, because we don't have a 50% B leg. So remember, we don't run around trading broken patterns around here. So if we come up to the high and we come down here, see, it's only 42%. We would have needed a 50% B to come up here, and then it would have been good. It would have been amazing, but and it's reacting, but it's invalid, so I'll take it off. Doesn't matter. Cool. So we missed the head and shoulders, and the only thing a person would be doing was just taking their chances on structure, and it's going longer than I wanted it to be, being oversold. So, all right, cool. So wanted to just come and talk about that. AMD is going to be very, very, very interesting. But remember, inside of there, once that next once this is finished. Also, let me say this: if anybody attempts to go long on AMD before $90, I understand how people get out. If anybody attempting to go long on AMD before $90 is just, it's completely insane. I'll tell you flat out, with what you see here. This pattern has to complete. So anyway, that being said, that's all I got on this one, and I will see you guys on the next one. Oh, I forgot, like this video if it provides value to you. Subscribe to the channel and turn your notifications on so you can be notified when my content comes out. And as always, if you are looking for the education that goes along with this, just check the playlist, the Harmonic Trading Academy playlist, where we cover everything that you see here from trend continuation, A to B is equal to C, D, double tops, double bottoms, and all the advanced pattern. There's a training on RSI. If it's there, you name it, and it's only growing. We're only getting started. Okay, but you guys take care of yourselves, and I'll see you in the next video.